side, but again, it's not complete. Gold largely playing a bit of a range here also, still in a very strong uptrend. It's difficult to say which way this is going to break, but looking at this, what we're going to do is pull up some other indicators here and see what we can come up with. Now, my opinion is gold likely to remain strong for some time, but again, that's left to be seen depending on global risk appetite. So let's put our all of our indicators back up here. We've got a bit of a mixed bag here. Triple EMA crossover is not complete. Predicted medium and long-term differences are not oversold. They have room to extend lower, absolutely. Our predicted MACD has crossed the trigger, but it is moving, trying to move below that zero line and far from oversold. So it definitely has room to move lower. Our predicted true strength indicator, it's above the zero line, looks like it's getting ready to cross that trigger, so certainly a point of interest there. Now, we've closed the week at 1207, a very weak close. We're going into, remember though, we're going into a holiday weekend in the US, so a lot of these prices are, you know, a little bit thin markets, low liquidity, things of that nature, so that's probably why you're seeing profit taking and things like that. My position is gold is going to remain probably in this uptrend. Now, with that said, let's go and have a look at some of our major currencies. Now, we've talked about the Japanese yen. We've got a heavily oversold signal here. This screams of a bounce. Again, I've talked about with the US dollar index and how the yen is not as clear as what some of those other currencies like the pound and the euro can be in relationship to the US dollar index. Now, my position is the yen is going to start losing steam on this downtrend, and we're getting ready for a bounce, and this oversold signal is simply confirming that. We've got our predicted MACD turning, you can see this angle, how it's starting to turn upside, getting ready to move towards the trigger, again in heavily oversold territory. Now, our predicted medium and long-term differences also oversold, so my opinion there is that the downside for the beginning week is probably going to be somewhat limited on the US-Japan. However, longs are certainly risky. I don't disagree there. Now, looking at the US-Canadian pair going into the week, we've talked extensively about that and how it's trading in this range. We can see the broader range using the Vantage Point software. We've got this 99.35 area. We've had this one lone candlestick that's managed to push up to the 108.50 level. However, the primary resistance sits at about 107.50. So, you know, to start the week, I don't like to do counter trend positions, but again, if I'm confident it's just trading into a range, the equities, if I believe that the equities and the commodities are going to reverse and the US dollar index is going to continue to weaken, then CAD, the Canadian dollar, should strengthen. Now, again, from a trade weighted perspective, we have to remember though too that the CAD can also be negatively affected by what's happening in the US, and that is certainly a concern. So while all those other currencies can actually make considerable gains against the US dollar, the CAD actually could suffer the brunt of that on those cross pairs also. For example, on Canada-Japan, Euro-Canada, these currencies are under pressure. So, and this indirectly affects the US-Canadian dollar, how they trade against each other. So to begin the week, we've got 104.40 is our key level of support. I can certainly see that level coming under pressure in the next few days, but again, we'll have to see what happens in this between 107.50 and 108.50 are critical levels. We'll be watching in order to trade this, we need to keep a very close eye on crude oil, and we need to keep a very close eye on the equity markets because there's been a very strong correlation there. Now, going into our next currency pair, we're looking at the British pound US dollar. Now, the British pound US dollar, this has been an absolutely fantastic trade. We've been in it for about a month if you were trading no other currency pair. You know, what I can do here is I can actually pull up the profit calculator where I actually recommended this back at the beginning of June actually, and if I bring this profit calculator all the way up here on this British pound US dollar, which continues to produce, this is just a rough calculation based on a single contract. But if we look at this, we've got 849 pips we've booked on this trade by repeatedly buying this thing on dips. And for the traders like myself that continue to hold long positions, you know, a single contract basis, $8,490. This is a very, very good trade, a very nice longer term trade. We had our pullbacks. We can see here how the market bounced off the 18-day predicted moving average 3 times. We can see it right here. This happened on June the 17th. It happened again on about June the 20th, and it actually happened again just last week, where you can see this lone candlestick has come all the way down to the 18-day predicted moving average from Vantage Point, which I identify as a major level of support and a great buying opportunity. Now, again, with that strong bounce coming down, hitting off that level, off that 148.80 area, and then shooting up, closing the week, it actually hit 152.28, but it closed the week at 151.97. Good strong close there. So looking at our our major levels here, 149.09, 150.35, and 151.27 are our 3 major levels of support. Only a sustained break of 150.35 will take the pressure off the top side. And again, looking at the analysis based around the US dollar index and the fact that the British pound, it makes up 11.9% of that US dollar index. The US dollar index, we have a clear sell signal on that. Again, we use the move, any move lower towards this 149.09 area, guys, is just a very good buying opportunity at this particular case. However, we do want to keep an eye on global risk appetite, watching those commodities, watching those equities, keeping a close eye on that. And if things get a little shaky, then we definitely want to make sure we're taking profit. Myself, I have profit locked in this 148 area, so any pullback towards that area will absolutely guarantee me 400 and some odd pips. That's the way I like to play this, and I'm leaving the top side open. Now, the reason I'm doing that, I have no reason to dump out of this trade. I'm buying further positions on dips for now, and again, I've locked in a certain amount of profit, and if it breaks through the key levels, then that's so be it. There's nothing I can do. But I always make sure I'm not going to let this thing retrace all the way back to my entry in that 140, 144, 144.85 area, or even the 146 area where I also have positions, because then I walk away with nothing. So I make sure I lock in that profit. Now, that's how everything so far on the British pound US dollar, everything still looks pretty good here. We're a little bit overbought. The predicted true strength indicator, trying to make that cross over to the downside. It is overbought, but again, if it moves lower, we're simply using that move lower to get back into the buy positions. Very important to remember that, to stay away from the market noise and everything else. We're not going to exit those buy positions until we have a clean signal from Vantage Point to tell us to do so. Now, going in, look at the Australian